Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. Okay, so in this particular video we are going to be looking at one of the most popular indicators for traders, and that is none other than the stochastic oscillator. Okay, now specifically in this video we'll be talking about the best stochastic settings for the daily chart. All right, as you can see, we are on the daily chart. This is the euro USD currency pair. Okay, so we are going to consider how you can optimize the settings for the stochastic oscillator on the daily chart in order to help the indicator to improve your analysis. All right, so whether you are just starting out or you are looking to fine-tune your daily chart strategy, this video is packed with useful insights that you won't want to miss. If you are excited to learn more about stochastic indicators and how to use them for daily chart trading, don't forget to hit that like button and subscribe for more videos just like this one. So let us get started. I'm just going to be loading the stochastic oscillator to the chart right away. I'm going to reset it to the default settings, and here we go. Now, before we go into the specific settings for the daily chart, let us do a quick refresher on what the stochastic oscillator is and why it is so important. All right. Now, the stochastic oscillator is a momentum indicator that compares the closing price of an asset to its price range over a specific period. Okay, it is used to identify potential overbought or oversold conditions in the market, helping traders spot potential reversals or trends. Now, unlike other indicators that focus on price movement or volume, the stochastic focuses on the closing price in relation to the high-low range. Okay, in relation to the high-low range. All right, we can see the price field is set to low high. All right, okay. So this can give you a clearer picture of whether a price is reaching its extreme levels, signaling potential for a reversal or continuation. Now, it's important for you to note the two main components of the stochastic oscillator. These are the percentage K and the percentage D. All right, these are the two lines that we can see here: the percentage K line and the percentage D line. All right. Now, the percentage K line is what we call the main line. Okay, it represents the current closing price in relation to the highest and lowest prices over a specific period. On the other hand, the percentage D line is the smoothed version of the percentage K line. It's usually a 3-period moving average of the percentage K. So as we can see, the main line is the light sea green colored line, while the signal line or the percentage D line is the red colored dotted line. All right. So these two lines are plotted together, and crossovers between them are often used as buy or sell signals. Okay, so when you have a bullish crossover within the oversold territory or close to the territory, you have a buy signal. When you have a bearish crossover within the overbought territory or close to the overbought territory, you have a sell signal. Now, why focus on the daily chart specifically? The daily chart gives us a broader view of the market's movement compared to shorter time frames like the 1 hour or 15-minute charts. By using the stochastic oscillator on the daily chart, you can filter out a lot of the noise and get a clearer sense of the overall market sentiment and potential trend direction. All right. Now, with the daily charts, you are looking at long-term trends and momentum, which can help you avoid the distractions that often occur in lower time frames. Okay, this is crucial for swing traders or anyone looking to capture larger price moves over several days or even weeks. Okay, now let us just get into the best stochastic settings for the daily chart. When you first apply the stochastic oscillator to your chart, as we did here, you will notice that it has the default settings. Okay, the default settings, as we already identified, is 533. All right. Now, you might want to experiment with a shorter period, like the 9 period for the percentage K. Sorry, I mean a longer period, like the 9 period for the percentage K as a day trader, right? And then if you are looking, that's going to make the stochastic, well suited for the daily charts or the daily time frame. Okay, if you are looking to filter out noise and trade more conservatively, You can even use a longer period like 21 period for the percentage K. But let's see how the 9 looks like. But for the purpose of more conservative approach, we're just going to be changing this to the 21 period, and we can see how it looks like. All right, it's going to give you smoother signals, as we can see, okay, compared to the default settings. Now, as for the percentage D, all right, as for the percentage D, a 3 period is going to work just fine. Okay, a 3 period is going to work just fine. But again, you can adjust this depending on how sensitive you want the indicator to be. A longer percentage D period will help smooth out fluctuations and give you a clearer trend signal. All right, while a shorter percentage D can give you quicker, more reactive signals. All right, now a pro tip: you can decide to start with the default settings and then experiment with either shorter or longer periods to see which one works best with your trading style. Okay, all right, now let us talk about the overbought and oversold levels. Okay, the stochastic oscillator is typically set to 80, as we can see here, for overbought and 20 for the oversold. Now, these levels are key because they can indicate potential reversal points. When the stochastic crosses above 80, it suggests that the market might be overbought, signaling a potential sell trend, a sell signal or reversal. On the flip side, when the stochastic crosses below the 20, it suggests oversold conditions, which could indicate a buying opportunity. But here's the thing: these levels can be adjusted depending on your strategy and market conditions. For instance, some traders prefer to use the 70-30 levels instead of the 80-20, right? Meaning 70 for overbought and 30 for oversold, all right? This makes the indicator less prone to false signals during periods of strong momentum or trending markets. If you are trading in a trending market, it might be better to adjust the level slightly higher, perhaps using 75-25, to avoid getting caught in choppy markets, okay, or in choppy moves. Now, one of the most important things to understand with stochastic is the crossover between the main line and the signal line, or the percentage K line and the percentage D line. A bullish crossover happens when the percentage K line crosses above the percentage D line, all right, which can signal a buying opportunity. Now, for a bearish crossover, it happens when the percentage K line crosses below the percentage D line, suggesting a potential selling opportunity. So for the daily chart, it's essential to confirm these crossovers with other indicators or price action. While the stochastic crossovers are powerful, relying solely on them can sometimes lead to false signals, okay, especially in choppy or sideways markets. You will also want to pay attention to the divergence pattern, between the stochastic oscillator and the price chart. If the price is making higher highs, for example, right? If the price is making higher highs, for example, okay, we can see we had a little bit of a higher high here, right? And then we can see we had a lower high here, and this is what we call a bearish divergence. Okay, this is what we call a bearish divergence. It's showing that bearish momentum was intensifying, and you can see that shortly afterward we had a sell. All right, so when you notice the price is making higher highs, but the indicator is making lower highs, it could indicate bearish divergence, just like what we had here, signaling a potential reversal to the downside, and eventually that reversal happened. Okay, so now one common problem traders face with stochastic is false signals. All right, it's false signals, especially when the market is in a strong trend. To filter out these false signals, it's helpful to use additional confirmation. You can pair stochastic with other indicators like the RSI or moving averages to get a clearer picture of market conditions. All right, now, for example, if the stochastic shows an overbought condition, let's just add the RSI to the chart for confirmation. All right, so I'm just going to be changing this to the default settings. Okay, so now we have added the RSI as a confirmation indicator. So if you have the stochastic showing an overbought condition, for example, but the RSI is still below 70, all right, let's just look for such example. Okay, we have something like this. You have the RSI still below 70. It could be an indication that the market is still in an uptrend. All right, so we can see that for a while, well, this period of consolidation, during that period of consolidation, we had the RSI still consolidating until the RSI now began to drop. Okay, as the RSI began to drop, it now confirmed the sell signal from the stochastic. Okay, so if you are new to trading or you are trying to get better at using the stochastic oscillator, don't worry if it takes a little time to find the perfect settings. Trading is a skill that takes patience, it takes practice, and it takes patience. All right, and the more you experiment with these settings, the more you'll be able to fine tune your approach. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more tips and strategies on trading with technical indicators. Drop a comment below if you have any questions or if there's another indicator you'd like me to break down in a future video. Thanks for watching and happy trading.